Welcome, everyone. Today, we're going to talk about market structure. And if you don't understand market structure, then nothing else in ICT matters, whether that's fair value gaps, order blocks, liquidity. Those are just fancy words that you can throw out the window. So, market structure is what is price doing. Today, we're going to look at the charts and check it out. Welcome to episode 2 of the ICT series with Dom DeBomb. All right, guys, welcome to the charts. So price only does two things. It's either going to trend up or trend down. Everything else is just basically noise. So try to just focus on market structure today. Ignore the candles, and what they look like. I'm gonna go into more depth on that later on in the series. But we're gonna determine the trend basically by looking at the swing highs and swing lows. So, what we're going to look at first is a bullish trend. These are 4-hour candles. Every time you see a candle, that is 4 hours of time. So, a bullish trend is a swing high. So, these are your swing highs, and let me move these out of the way. This is a swing high right here. This is a swing low, and swing low. This low is higher than this one and continued price. This low is higher than this one and continued price. This is a swing high. This high is higher than this, and this high is higher than this. This is called a bullish trend where price is going up and buyers are in control. Every pullback basically fades and returns into a trend. Pullback fades, returns into the trend. So when I see this, I just think as long as price keeps moving higher highs and making higher lows, then there's no reason for me to short and just continue the trend. The saying is the trend is your friend until it isn't, which is a perfect example. All right, let's look at a bearish trend, which is right now. So from June 26 to July 26, 1 month, we've been in a bearish trend. It's been a very hard market because not only is it bearish, but it's kind of accumulating and not really going anywhere. So your bearish trends is a high, a lower high, and a lower high with a low, a lower low, another lower low, and another lower low. So you can almost assume that right now, today, we're probably going to make another high and then come back and make another low, right? See a trend here? So every pop right here is getting faded and dropping out. Pop, fade, pop, fade, pop, fade. And when I see this, I look for shorts until proven otherwise. So the trend is your friend. Everybody together until it isn't. All right, break of structure. What is a break of structure? I'm going to tell you. Go ahead and relax. I know you're on the edge of your seat. Break of structure is this. This is your low, right? The low that we had drawn out. And the market, instead of taking a bounce right here, it broke through the low, came back up, and came back and broke this low right here. So break a structure, broke the structure, went up, came back down, broke the structure again. This tells me that the current trend is still healthy. We are in a healthy down market still. The friend is your trend until it isn't. So we can assume that, maybe we'll continue to make some shorts here. Then when you don't have a break of structure and you start freaking out is when you look for market structure shifts. What that is like, what is what that is basically like the reversal. So the 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 bulls are taking over. Go ahead and sit the bears aside. So all right, it's like the hedge fund saying, all right, no more selling. We're in control of this now, and you'll see some dramatic things. So this was a lower high, and then bam, look at that. That is a market structure shift. We have completely shifted the market with a huge breakthrough right here. And this is a normal market structure shift breakthrough. Is these big candles. And then we even break it right here. So just to confirm, we broke it right here. Look, isn't that funny how you can see resistance right here? Resistance, 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 breakthrough. All right. And that's when you start your higher highs and higher lows. So higher high, higher high, higher high, higher low, higher low, higher low, higher high, higher low. And it doesn't mean like it's guaranteed all the time, but it's telling you, hey, start paying attention. We have a market structure shift. So I hope you enjoyed some of these. If you have any questions on any of this, go ahead and put in the comments. I'll answer. I know it's kind of a little bit elementary if you've already been trading, but I promise it's going to help, and it's a good refresher. And if you don't know this, it looks easy because it is easy. If you're enjoying it, then that's really good. That means you like it. All right. All right, guys. I hope that helps. Just to wrap things up, before I do anything in the charts, I look at what is price doing. What is the market structure? If I don't know that answer, I'm trading blind for the day. So if you have TradingView or any other chart analysis platform that you mark charts on, go ahead and try to play with these concepts. Mark out your swing highs, lows, structure shifts, break of structures, all of that. I hope to see you back at ICT Series episode 3, and I'm going to make all you guys profitable.